Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So actually, from technical point of view, not many things to talk about. I think that, well, actually we have the single major detail that we have to discuss, and then we briefly will take a look at the intraday performance. In the beginning, I would say that, well, we have prepared weekly report as usual. There we have taken a look at some specific questions that we were not able to consider yesterday in the Forex report. Just because in the recent few months, actually, guys, you probably already understand that you should treat both reports, despite that it's called the Forex Pro and the Gold Market Pro. In general, this is the whole report that gives the overall outlook on the situation and the markets and politics everywhere, just because markets right now are so tied together and stand on the impact of the same factors, not non-specific factors, so common factors for all markets, that you could just consider both of them together and let's make the conclusion on the actually major driving factors that we have in the market, and we just split the impact on the both markets in conclusion. So the factors that are more specific for the Forex were put in the Forex report, and how the current events in different spheres impact on the gold market we put in the conclusion of the gold report, but in general factors are the same. So today we will take a look at some few moments that are more important for the gold performance. Things that we see right now makes us think that our long-term view is correct, and we expect the rising of the gold prices in nearest time. Also, we'll take a brief look at the silver, because silver is currently strongly undervalued compares to the gold in particular, and compares to the perspective that's actually stand on the horizon for the silver market in particular and for commodities in general. And also we have taken a look at some political news that could make impact on the gold in the nearest future. That's in general what we were considering. So speaking on the technical side, the most important thing that we have to take into consideration, because it might be important right in the next week, is the 1840-1870 level. On the daily chart you can't see this, but if you'll take a look at the weekly, you'll see that market is accelerating to the downside. And recent 2 weeks showing the tail close, which usually suggests that we could ignore the COP target. Usually market, when it shows the acceleration, it doesn't stop for a long time around COP. This might be either no reaction or it will be very small. So in such circumstances, usually traders ignore the COP target as market directly accelerates to the OP. I'm sure that you saw it many times on the market. Besides, take a look how market responds to the breakout of the lows. It just stands below it without any attempt to show the bounce, somehow show a reaction or something of that sort. The 1910 confluence level currently is broken totally. So, and the way of the breakout is also very important. It's just because you can see market has passed through it as it no exists. So no response have happened even on the lower time frame. So all the stuff looks bearish, but at the same time we have to pay attention to the 1870 target. Why? It's just because 1840, where we have the oversold on the daily chart, this is the monthly first fib level. This is very important, and potentially on the monthly chart within the 2 months we could get the bullish grabber. That's why this makes us the conclusion that we should not ignore the 1870 target. Yes, market could show the bounce not precisely from the 1870. It could move slightly lower, but approximately in an area around 1850, 1855, so it's 1840, 1870, somewhere around this area, it might be the level where market could show the upward bounce, could start the upward bounce with a high degree of the probability. That's the first moment. So if you keep short with our entry, with our entry stops that we have discussed within the previous couple of weeks, you have to be careful, control risk, and closely watch for these levels, trying to just out of the position as soon as market will show first signs of the possible bullish reversal. Second moment is that performance up from the 1850 area might be not just a minor retracement, but it might be total reversal. Why? Because by our view, supposedly somewhere in September and October, we could get the reversal on the CPI numbers. So real interest rates once again will start dropping. Just because despite that interest rates on the United States are rising, any rise in inflation will push the real rates lower, and that is fundamental driving factor for the gold. So from that standpoint, here, if it will be accompanied also with some geopolitical events, we also discussed in the weekly report, it might be not just the bounce, but really strong upward action. It also might happen. Other words speaking, would not exclude the chance that somewhere around 1840, 1870, it might become the reversal point for the gold. We're not sure. We need to control this through the common statistic, other factors, but chances are not small that it could happen. That's two major moments that we have to keep an eye on. All other stuff is mostly tactical and make no big impact on the overall picture. So take a look at the hourly chart. You could see that our entry once again has worked really nice. It's happened properly. So first we're taking position around conference 1905. Last week we said keep an eye on this conference and this bar. You could take in position right there. So if you're taking position, market already dropped. So both entries right there and here. And if you have taken position even before that, when we're considering butterflies and other stuff on this downside channel, you could hold this position with the break-even stops and see what will happen. Once we come closer to the 1870, be careful and keep an eye on where it makes sense to maybe start closing, because it seems that the next stop around 1870 might be next destination of the market. If it will keep dropping in the same manner as in here, it seems that somewhere around 1876 might be the next step, or market could try to make the two iterations until it will reach the target, but we're close. For instance, I'd not exclude the chance that we could get here something like this. It also might happen, and this butterfly will be 1618 somewhere around 1876, so this could happen as well, especially since we have on a 4-hour time frame chart bearish grabber on the back. Suggest taking out of these lows, and it might be a really downside continuation inside of this channel. That's the minor tactical moments that we have here on the 4 time frame chart and on the hourly chart. So let's keep watching.